We've got the SBI Chairman Arundhati Bhattacharya exclusively in conversation with Anirudh Ghosh.
And also write-offs of around 5,000 crore, a figure we haven't really seen SBI report since a long time. So I just was curious to ask you, is cleaning up the balance sheet the topmost priority for you right now?
Yes, it is, absolutely. I think at some particular point of time you do need to write off. As you know, in the public sector there are always a lot of reservations on doing something like this, because a number of questions get asked, and sometimes it is difficult to keep on sort of taking those questions and then still acting in a decisive manner. But we believe that what we have done is correct, because though they are written off, we have a very robust system of following up. So there is no question of letting go, or there is no question of forgetting about whatever we have written off. As you know that we have set up a stressed asset vertical. That vertical is working quite well. In the last 3 or 4 years they have gained a lot of experience. They are quite good at resolving these NPA issues currently and ensuring that we realize as much as we possibly can out of it. And therefore, our concerns on this are mitigated to the extent that while we do clean up the balance sheet, these get looked after also subsequent to that, and line by line these are followed up. There is a system for reviewing it right up to the board level. So there is no lack of attention on these counts, and therefore we can comfortably write it off and yet know that follow-up will continue to happen.
Alright, so if we keep in mind this particular measure that you have taken and we focus on your loan recovery, we did see a good amount happening in Q3. Going forward, are you expecting more amount, significant amount of loan recoveries and upgradations?
Yes, that will happen. We will also be doing sales to ARCs. We will also, be following up with the ARCs where full money is not realized. So even that structure we have created. So we are quite confident, that we will be able to handle the NPAs very well. And I think, we have given very clear signals where we have found the management wanting. We have given very clear signals, that this is not something that we will take lying down, that we will take whatever steps is required in order to ensure that we put in a management that is responsive and that shows good management and good corporate governance. So those messages are also being given very clearly to all borrowers.
Alright, and if you just focus on the ARCs, you said you are looking at selling. How much amount are you really targeting, or maybe you have in mind for the March quarter? And going forward, are you also looking at selling your bad loans to maybe private equity firms? And there are also reports which are suggesting that maybe RBI and Finance Ministry is looking to start this new compulsory process where if your gross NPAs is above 5%, that over and above you will be forced to sell to ARCs. Do you think that is feasible?
I don't really see how, because after all, if the ARCs are not giving you a proper valuation, how do you just go ahead and sell it? So I don't really know the nitty-gritty of what is being thought about. This is not something that we have discussed with the regulator, so I wouldn't be very clear about it. But having said that, it is a fact that the regulator does want us to clean up the balance sheet. It does want us to sell to ARCs, because that is a way of ensuring that the ARCs do the NPA recovery, because that is the only job they do. Unlike a commercial bank, I need to also, sort of get past this and focus on new business. Whereas for an ARC, his only business is recovery of NPAs. So RBI wants that the ARC should do this. Then they believe that this will be a more efficient manner of recovering NPAs. And we agree. So to that extent, I'm looking at sales. To give you the number is a little difficult. I can't really give you the number, but we are looking at substantial sales to ARCs, and we should be able to do that this quarter.
And are you seeing good appetite for this thing?
Yes, but again, there is too much suddenly in the market. So to that extent, the kind of appetite we saw with the ARCs maybe even a quarter back, that appetite seems to be coming down. Mainly because there is a surfeit of such things in the market right now. So the ARCs also need to recapitalize, they also need to raise funds. But I think going forward, once that stability happens, suddenly, if there is a flood of such things happening, then obviously the ARCs are also a little overwhelmed. But I believe, over a period of time that this will smoothen out. And once we have got past the first sale, we will see that we will do it regularly. Similarly with the write-offs also, once we have got past that first hump, we will see it happening in a regular manner. So we will be not seeing these lumpy figures coming up. These will be, things that we will do as a matter of course. And as I said earlier, as long as I'm sure that I will follow up on these, that these will not sort of lose our attention, we have no worries. Because the main thing is that we still need to recover. And that recovery will have sufficient amount of attention from the banks.
And you've also time and again mentioned that as far as the stress sectors of SBI concerned, it includes the mid-corporate, the large SMEs, and of course the agri portfolio. And you've also become a little cautious when it comes to lending to these sectors. So going forward, will you continue to remain risk-averse, and are there any more sectors also that are showing stress at the moment?
No, at the moment, in fact, agri is also not showing too much of stress at this point of time. I'm happy with the way agri is being handled. It's been handled very, very well, I must say. We had some special campaigns for it with some names, catchy names and stuff like that, and it's doing very well. In respect of the large SMEs and the mid-corporate, I continue to see stress. As I said again, mainly on account of the fact that these are corporates that don't have deep pockets. They are in a single line of business, so they don't have other businesses that can sort of contribute to the cash flow. Also, they don't have too much of assets that can be sort of sold off. So individually, we need to work through all of this. Where they are viable, we will continue to restructure. Where they are not viable, we'll try and sell them off. We will try and match them up with private equity investors. While we are not directly selling to private equity investors, but we are trying to contact them and see, whether there is a way that they can directly help out the corporate that's in distress. So all of these things are going on. I think the corporates themselves are also trying very hard. And all those who are serious about their business, they are all trying whatever they can in order to see how they can sort of ride out the downturn. And these things are continuing. But I will not say that the stress has totally gone away or that we are not seeing stress. That is not the fact. The only thing is we are doing much more proactively. So proactively, even as this begin to show the stress, we start having an action plan. We follow up on the action taken. And many a times the action plan might be something that is out of the box. So all of those things are happening.
All right. And without drawing any comparisons between the management, we did see SBI reporting profit of nearly 4,000 crores 2 years back, and now that has fallen to around the 2,000 crore levels. So going forward, could we expect the same range of profit growth for some more quarters, or are we seeing some amount of rebound in growth going forward?
See, this year was particularly stressed on account of the fact, first of all, the NPAs, of course, they result in our interest income getting written back. Secondly, we have to make a lot of provisions. Even when you're restructuring, you are making huge provisions. So the provisions will come to around 15% even for a restructure, because you're not only making 5% provision for doing the restructuring, but you're also making NPV losses, provisions and things like that. So the provisions come up to around 12 to 15%. So all of these obviously are a stress. The added stress were the two factors on account of the revision of wages, and the second one was the actuarial tables being revised. So those again were substantial numbers that came in, 600 crores per quarter on the actuarial tables, and another around 300 crores on account of the revision of the wages, where we made a full 15% rise. Now, as you can understand, in the bank, at least in the public sector, the wages go up in a spike to 15%, and then they sort of taper out over the next 5 years. So over the next 5 years, as this thing tapers out, and as the rest of the industry also catches up, on account of inflation and all, so you'll find that this will get rationalized. And obviously, as these get rationalized and these one-time pension things taper off, therefore, to that extent, profits obviously, they will come back. Also, we are doing a lot of things, to ensure that we get the right amount of other income. That is not only interest income. We are also trying to tweak our rates so as to ensure, that the return on the assets that we are booking, that those are proper, that the return on capital that we are getting is proper. So going forward, definitely we are expecting improvements. Now, whether they will go up to the earlier level, only time will tell. I don't want to give any forward guidance. But definitely, we are looking at things becoming a little better.
And if I bring